With everything going on in 2020, we have yet to see the problem subside. California, Texas, Florida, and others have seen their fair share of ups and downs. The average individual has been struggling to keep everything moving. Millions haven't received their stimulus. The government is backlogged and overburdened. They cannot ever deal with this many problems at once. And as always, the Fed cannot bail them out. They can bail out Apple, Walmart, and Berkshire Hathaway, though. You came here for the truth, so let me unveil that for you. Today we're going to get into the details. Number one, with the Federal Reserve. I'm going to give you the update on what's happening with their balance sheet. It actually declined. Let me just start right there. Can you believe it? 3 weeks in a row, it has declined. I'll show you everything you need to know around that. We are going to talk about what's happening in the stock markets. I'm going to show you the flow, where the money is going. You're going to know exactly where the money is going. Today, I will show you some new data from the EPFR. We are also going to look at what's happening with the economic situation, the job situation, electricity bills rising, people getting evicted. Well, what's going to happen with all of this overburdened and massively indebted group of people here in 2020? We're going to talk about that. So let's begin. Here we go. Federal Reserve, their balance sheet. Can you believe it? Inching closer to falling below $7 trillion. Have no fear though, because they're still printing money every single day. They're printing a lot of it. In fact, I will give you the breakdown as part of the H41. I'll show you that in just a second. I just wanted to highlight that this is now 3 weeks in a row where the balance sheet as a whole has declined. There's so much more to it than saying they are printing money or they're not printing money. Previously, it was really easy. There was two main things that they were doing: mortgage-backed securities and the treasuries, and we would follow that. You'd be able to anticipate what's happening with their balance sheet. But today, there's so many different programs that they have. There's so many things going on. It's hard to keep track, but I'm going to show you once again. If you've been following this channel, you know what's actually happening. So I'll give you the details here. Looking at the Federal Reserve's balance sheet on the top and the weekly change on the bottom. So you could see that it has declined, at least over the past couple of years. We haven't seen a decline like this. But once again, it's not just the treasuries and the mortgage-backed securities. There's more to it. Here is the Federal Reserve's H41. If you want to look up the details of exactly what the Federal Reserve is doing, just go to a search engine and type in H41 Fed, and you will be taken to the federalreserve.gov website. Here you can look further down and just see all of the details. It just shows you that in this case here, mortgage-backed securities fell by just slightly, which is surprising because the intention was, of course, to print $120 billion per month in between the mortgage-backed securities and the treasuries. But on a week-to-week basis, this is going to fluctuate. It depends on what's coming in and out, the maturities of these so-called assets, and so forth. The full breakdown is in here if you want to check it out. All I wanted to stress was that we're still looking at the balance sheet overall increasing, and that is very important because the market is looking for this and the response to what's going on with interest rates. Interest rates obviously being very, very key. In order to get the interest rates to decline, you need to print money. You need to print a lot of it through the open market operations and so on. So that's important. Also wanted to note the fact that the repo operations declined as well. This has been happening overall. I just wanted to show you that here in the H41. My all-time favorite chart, you can see the Federal Reserve's balance sheet in conjunction with the S&P 500. And of course, this has looked very, very accurate over the last few months as we have seen the balance sheet expanding dramatically. The S&P in recent weeks has been quite volatile. Is it a coincidence that also during this period, we have seen the S&P 500 acting very erratically? The VIX index is still elevated on a historic basis. It's all speculation at this point. We'll only know really in the rear view mirror. And personally, as far as I'm concerned, the week-to-week gyrations are nothing that we should be worried about, nothing that we should be focusing on so much. It is that longer-term trend. It is very clear here when you look over the past few months, these two are correlated. Bank of America gives us this data, and we are looking at the cash continuing to pile up. Money market funds have grown tremendously. As you can see here in 2020, a lot of money has flown into this particular asset class. People are unsure, they are concerned, they want that liquidity, and cash in this method is where a lot of that money has been heading. Now, it doesn't necessarily mean they're not buying equities. It doesn't mean they're not buying real estate. This just shows you one aspect here. Year-to-date flow, winners and losers, and you could see on the left-hand side, cash. This information comes to us from the EPFR. I have mentioned this many times. EPFR gives us what's going on with the flows, the money flows. You're going to know where the money is flowing in and out of by seeking out the data provided to you by the EPFR. In this case here, Bank of America put that together, and you could see how much money is flowing into cash. Similar pattern here with bonds, and then we look at gold and commodities. Gold clearly has been performing very well this year. Doesn't usually get the attention that we see with equities, but right now, because there's so much concern surrounding what we are looking at, the crisis of 2020, the stock market problems, all of these different unknowns, more money has been flowing into gold. On the opposite end of the spectrum, we're looking at US value, EU equities, and emerging market debt and equities, all not doing so well. This chart just gives you a comparison. We're looking at the retail favorites, the black line, which have clearly outperformed not only the S&P 500, but also this hedge fund index. Many of these names, whether that includes Hertz and other bankrupt companies or not, it has clearly shown us today that there is maximum euphoria in the system. It is at the levels of 1999, where any company that ended in .com would have been worth putting your entire life savings into. And then they found out soon after that once again, retail investors do not know what they're doing in many cases. Nobody wants to believe that until it's too late, but that's just the way it is. Historically, it's always the complete opposite. Whenever retail investors are piling in, the market doesn't do well. The difference here is that we have never seen a devaluation of the currency in the way that we're seeing it today. It's ridiculous. So who knows? This is an article out of Freight Waves, and it's talking about the super tankers. Super tanker rates nosedive, the dam has burst. They give you a description here at the top, and then it says, alas, there are now a lot more tankers than cargoes. Rates are sliding, owners are capitulating, and charters have the upper hand. At the bottom here, the dam has burst. And the VLCC, that's the very large crude carriers, their rates have taken an overdue nosedive. There's more in here, but essentially what we have seen with the rates of all of these different types of cargo, air shipping, sea shipping, and so on, not so much with the sea shipping, but in general, rates peaked up in March and have fallen since. We know that there's been serious problems with all different types of freight today. We have seen the numbers that have been absolutely terrible. A lot of the reason why, particularly with air shipping, why it had become so expensive was that much of that shipping takes place on passenger jets. So the cargo gets put in the jet beforehand, before the passengers are there, it's ready to go, and it flies from one place to another. But when there's no passengers being flown, there's no planes being used. So suddenly the amount of planes in total that are being used as cargo indirectly are shrinking down. Supply and demand, this is a big issue. We have seen many problems here in 2020, and it doesn't seem to be stopping anytime soon. This article out of Bloomberg is talking about electricity bills, that the increase in electricity bills may drive some to the brink of financial ruin. With soaring temperatures expected in July and August, people stuck at home because they're unemployed or working remotely will depend on air conditioners more now than ever. That's going to drive up power bills by as much as 25% in parts of the US. US. This is coming at a time when there is significant hardship for about 50 million people. But if you look at the news, they're telling you everything's A-okay, so you don't have to worry then. Well, which one is it? Pick a side. Those increases, which will amount to as much as $50 more per month, may be manageable for most of the middle and upper middle income families, but there'll be a heavy burden for those near the poverty line who spend a disproportionate amount of their income on utility bills. This is also a problem because if people are spending that extra $50 on the electricity, they're not going to spend it at the restaurants if they want to go. They're not going to spend it on whatever new gadget or whatever it might be. That $50 every single month has to go to their energy. They're not putting it out somewhere else. So they've got to tighten their belts, they've got to do what they can, and that means on top of everything else that's been going on, more sluggishness. This article here, I'm not going to get into the details, but as you can see by the image that's here, they're looking at this closure that's taking place with the restaurants in California, and they just give a few examples, personal examples. Many individuals here are just getting hit so hard. They're coming back to work. The next thing they know, they're out of work again. There are so many examples that restaurants had to let a whole bunch of people go, quote unquote, let people go. They don't know when they're going to need people back. They're not really sure about that. Too many questions. It's hard for an employer to keep people on the payroll. It's very expensive. And unfortunately for so many, this is an industry where there's nothing but question marks surrounding it. And that's a huge issue today that cannot be resolved by the Federal Reserve buying up corporate debt of Berkshire Hathaway and Apple. The auto industry is one of the most hard hit that we have seen. It's a problem that's been going on for a while, of course. And now, as we have seen businesses that are shifting permanently to work from home, I really do think that this is going to be a trend. You're going to see a lot of people that only have one car as opposed to having two previously. One might suffice. That doesn't really look good for all of these companies that were unable to sell all of these vehicles that were already built before 2020. They were sitting in the lots. We were talking about this on this channel. Let's say before January, all of this stuff was happening. And now today, the issue is essentially permanent. GM, Fiat Chrysler US auto sales tank in the second quarter. Auto research firms forecast sales to fall by about 34% in the second quarter. This article out of CNBC gets into a few issues, but it is talking about the evictions. I really think that there will be many individuals left without a place to live at this time. The amount of people that are living on the streets will grow. We'll see that a lot. I really do think that this is going to become, I don't want to say normal, but certainly more pervasive. There's a lot of detail in this article if you're interested to get into some of the factors, different areas, different examples. If you're interested, I have gotten into this on many occasions. It's not very pleasant to discuss, but certainly it is a real factor that it's just ignored by what we're seeing with the markets and everything else. They do not care. The bottom 50%, unfortunately, the amount of people in there is going to be really, it's going to grow, and we're going to see too much of the population falling in or around the poverty line. And that's something that's not going to change anytime soon, that's for sure. This article here is just basically talking about how many people have found themselves back living at home. So they were living at home, they moved out, 2020 crisis happened, they had to move back with their parents. There's nothing wrong with that if that's what you want to do, but if it's because of an economic reason, if it's because of too much debt, if it's because of what we are seeing here 2020 as an example, then we have an issue. That seems to be the case here today for so many. Just imagine how much debt with $1.6 trillion of student debt. That's only one factor. You add all the others on top of it, as well as the fact that rents are ridiculously high. Real estate is ridiculously high. I just showed you electricity prices are increasing. It's not looking good at all. And just to reiterate my point, the Federal Reserve, they're going out there, they're buying Apple, Berkshire, Walmart, their debt. That doesn't help you. That doesn't help the main street. It's all to support their friends in high places. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. Just click the like button. Thank you very much. If you want to check me out on Instagram and Twitter, @TheMoneyGPS. If you want to learn how to sell stuff online, I'm talking about e-commerce, the step-by-step that you need for free, you can do so at the Amazon GPS. If you want to understand the financial system, I'm talking about easy explanations. It makes it simple to understand, to learn what you need to know, to ask the right questions. These two books have everything you need. Check the link in the description if you want the audiobook, themoneygps.com. Wait a second, don't go anywhere. You've got to watch this video. It's really important. A lot of detail. Check it out. I'll see you there.